COVID-19 has turbocharged the pace of technology adoption, changing the way people live, study, and work. Such a paradigm shift has also created promising prospects for the financial sector.
Adapting to the new normal, insurers are in search of innovative ways to improve customer experience and operational efficiency. Shouldering the statutory mandate as both regulator and facilitator, IA spares no effort in keeping up this rapid pace of change.
The rise of Insurtech heralds a wider selection of customized products catering for underserved market segments, distributed via diversified channels, helping to close protection gap and deepen financial inclusion.
People prefer an online platform that recognizes their specific situations and offers relevant solutions in real time, such as data exchange, price comparisons, and risk analysis.
Insurtech applications set the scene of the future of insurance by enhancing accessibility, diversity, efficiency, speed, convenience, security, and transparency.
With Insurtech, we will be able to provide better customer experience through offering fast, convenient, and personalized solutions.
The open API also means minimizing potential manual work, leading to a more efficient business workflow and enhanced productivity.
It will greatly enhance our customer experience with faster turnaround time for commencements of policy protection, greater data accuracy, and better protection on customer data.
The ultimate beauty of Insurtech is to enhance the user experience. We always strike seamless customer journey at core and embrace digital innovation.
Insurtech offers the scope for boundless imagination, enormous satisfaction, and an array of attractive rewards.
If you have some exciting ideas in mind, please find time to have a chat with our Insurtech facilitation team.
Let us join hands to build a more vibrant and sustainable insurance sector for Hong Kong. May the force of innovation be with you. There's a glitch in that video because I'm left-handed. So may the force of innovation be with you. This is the correct version. Now, there was a big debate in my office yesterday. We were deciding, well, we were trying to decide whether I'm going to dress like Obi-Wan Kenobi, or I'm going to put in my R2-D2 and C-3PO hoodie. And of course, that discussion didn't end very well when they said that I'm a natural Master Yoda lookalike. So here I am. I don't think they meant to say my complexion, but then yet, Master Yoda is not exactly my favorite character, but there you are. Now, you have heard from many big names about big things. I glanced through the agenda. I know that you've heard things like the grandeur of the metaverse, how to grab your virtual land, NFTs, and tokenization. And I don't believe I can match up to that. So I'll bring you a little bit more back to the ground on this particular presentation. I will try to write on what I have said last year. And I will start with a bit of a summary of the refined priorities of the IA, which we showed you last year through the tree in my presentation. And we'll highlight some notable industry trend. I think it is a right thing to do because of the pandemic in its very dynamic way of evolution. We will report to you a bit about the open API framework that we alluded to last year. We'll talk about green finance as last year. We'll conclude a little bit with cybersecurity as a dark and bright side, if you know it's a Star Wars thing. And then we will conclude with a refined IA philosophy. Last year, I presented a bicycle and said that as a regulator, we should balance between supervision and facilitation. This year, we have something new. Again, Star Wars related, so stay tuned. We'll start the first slide. Will be simple. In fact, from the tree that we presented last year with all the statutory responsibilities, I think we should boil down to a couple of main focuses, which I think runs through to a lot of financial regulators, including the IA. The first is, of course, to make sure that we maximize our niches, which is, in fact, unique to Hong Kong, the one country, two system, whereby we can lean on a big market, but yet be open to the world. And secondly, we should try to make the best out of the insurance sector, most prominently to promote it as an RMC, a risk management center, which in turn will contribute towards Hong Kong as an IFC. So it's really about RMC, IFC. And the third one, which I think is equally important, if not more important to a lot of you, is how to serve the public. So by doing business, we should also help the local community in reinforcing a social safety net. We do have a social safety net, but many would argue that that safety net is not deep enough. So how could we do business while helping society? So in a nutshell, we're trying to deal with our contribution to the nation, our contribution to the city, to the SAR itself, and our contribution to the people. Now, move on to the next slide. I will now talk a little bit about what happened during the pandemic. Of course, the pandemic has lasted for 3 years, and I will perhaps talk a little bit about what happened last year, and hopefully when I get the luck of being invited again here next year, I can tell you a bit more. 4 things. First, there's always been a structural imbalance in the insurance market, most prominently in the life insurance market. We have a very heavy dependency on our mainland compatriots as customers in Hong Kong. Those of you in the industry will know better than I do. At one stage in 2016, they make up about 39% of our new business, and I think you can agree with me that as of now, it's down to almost zero. In fact, it's 0.7%. That is a big dependency, and that is a big vulnerability. So the pandemic is a call of awakening to this particular fact. In fact, the closure of the borders has led to a 21% collapse of the new business in the life insurance sector in the year 2021. So there's no choice. The pandemic won't go away. The border won't open, at least in the very, very near future. So what the industry did was to survive. So they adjusted. They have revamped the product. They have adopted internet furiously. They have reskilled and upskilled a lot of the intermediaries. And as a result, in fact, they did amazing things. They engineered a rebound of 27% against a low base, of course, in the year 2021. So they make up a lot of lost ground that they have suffered in year 2020. But who did they get these business from? Local people, domestic demand. Okay, so in a way, it's a pain. But in a way, it's a very good method of redressing the structural dependency that we had before. I've used up too many minutes on this already. And there's a shift in consumer preferences. People tend to prefer more about protection than about investment and savings. And then in order to engineer that change, there's a lot of investment into digitization. Now 70% of insurers said they'll invest more in Insurtech in the next 3 years, and 12% of the workforce in the industry is now engaged in tech or related faculty of work. Now, there are also more usage of metaverse and NFT for promotion. You have seen insurers issuing NFTs. You've heard about insurers using metaverse to promote training and to promote customer service. There are new touch points. There are use of telemetrics. Most recently, last week, you've heard that the newest thing is called Internet of Vehicles. In fact, there is an invention that actually uses IoT devices to improve the underwriting skills and the underwriting quality of the taxi trade, or part of the taxi trade. And then we have more wearables. Wearables for people, for chronic patients, that enable them to be able to get insured. So it helps people to spread risk, whereas before they couldn't. So it's really upon themselves to try to use the technology together with the insurance industry to try to derive greater mutual benefits. Finally, the fourth one, virtual experience. Our virtual insurers, some of them are already here. They have seen 10-fold to 4-fold increases in the last couple of years. They've seen more inquiries. They hope to have more conversion, but yet, this is something which is very obvious, and this is something which we believe is going to last. Now, let me just emphasize here, the IA is progressive. We are also liberal. If you look back in time, it was the end of 2018 when we authorized the first virtual insurer. We authorized the fourth, and up to now, the final one in May of 2020. So we see a lot of potential in these people. And therefore, I think we are the first regulator to step into this space. And we continue to do that. In fact, recently we had a meeting with the virtual insurers. We are looking at how we can navigate the next step of their development. Now, on the next slide, we're going to look forward a little bit. For next year, what do we look for? I believe next year we'll be looking for three things. Basically, to use data connectivity to build a more vibrant ecosystem. I'll talk about Open API later on. We also want to improve the data gaps that we have on green finance, because we believe that this is an area where we can do a lot of good while do a lot of business. And finally, we wish to look a little bit on the dark side of innovation, which is cybersecurity. As we get more digitized, as we move into more areas of touch points with customers in different ways, we need to bolster our defense. But at the same time, I will tell you, this also has its own prospects. Now, I'll move a little bit quickly now on the Open API framework. I will just recap what I've said last year. I've said that we're going to use this year to do a couple of constructive processes. We have, in fact, in October 2021, set up a working group comprising all the stakeholders, insurers, tech companies, and consultants, to work on the basic idea. And then in August 2022, which is this year, we have started with the HMA a cross-sector dialogue so that the industry can tell us what they're capable of and what we can do to provide a conducive environment for that. We are building an API data portal with the Science Park to allow people to share data. We have completed phase 1 of the use case recruitment exercise. We've got 30 proposals. You've seen some of them in the video clip at the beginning. I'm not going to repeat some of those. Try and ask the people who are involved, and you get to know 30 of them. Now, and we're going to have phase 2. Now, this is something which I'm going to call upon you. In phase 2, we are looking at cross-boundary connectivity. We are short of use cases in that particular area, and if you have good ideas, if you have courage, I encourage you to approach us on phase 2. And finally, the Open API Framework soft consultation is going to start in the first quarter of next year. If you have anything that you wish us to know, do keep us posted. Now, in terms of green, what we focus on is, in fact, one single thing: to make sure that we get the required data to try and deliver what we're capable of. You can see that on the left side of the slide, we reiterated the things that we can do in terms of risk modeling, in terms of risk assessment, and in terms of providing mitigation products. But what we need is a bridge. We need the data to do it. So we have been working very intensively with the CASG, the cross-sector agency group, to try to develop the data repository at the Center for Green and Sustainable Finance. We're trying to discover data where they are, some in government departments, some with insurers, some perhaps with the academia, but we're trying to get things, for example, like cat damage statistics, things like microclimate data in terms of flood damage, typhoon damage, storm surges, landslides, things like that. We're going to also get from some government department, district urban planning characteristics, which in turn will feed into risk modeling, and which again in turn will likely to be able to provide better risk assessment, both in terms of physical risk and in terms of transitional risk, allowing the insurance industry to produce products. And I believe that that product is going to be geared towards the SMEs that comprises 99% of the business sector in Hong Kong, thereby allowing expanded insurability. Insurability, in fact, means pooling of the risk together, make them stronger. You have the old Chinese story of you can pick one arrow, you can't pick one basket of them. Now I think translates ultimately into financial inclusiveness, which means that people get a right product and affordable price. Now, on the cyber resilience, I've told you there's a dark side. There's always a dark side, but I think dark side also has a silver lining. So on the left, you can see that there are some very exciting potential. And when we're talking about data connectivity, we're talking about the GBA, we're talking about a huge data pool. We're talking about 87 million people. If we talk about data, this is the data. This is the data where we can do more analytics. But how to do it? Using what tools? How can we make sure that we do it legally and without invading people's privacy is a question. Now, at the same time, with that very exciting potential, we have an aggravating financial loss. And Hong Kong, I think, is still lucky in terms of the situation we're in. But I was told that it's already 20 times increased in the last decade. We're talking about $3 billion on the rise. And finally, with more and more insurers now investing into digital platforms, we need to cushion them with the right kind of defense. Because if this kind of things happen, as you will recall recently, there is a case in Australia, is still, I think, still developing. There are a lot of potential vulnerabilities. And finally, on the right side, we named a field, a vulnerability on system, on data, on processes, and on institutional link. But we conclude with the lower right side, which is we need to have some kind of risk-based assessment tool to assist the insurers, to assist the regulator to do calibrated defense. And secondly, we also need to work with the industry to see how we can serve our purpose, to try to provide the products and services that help the society to mitigate this risk. A lot of tech-based virtual insurers told me that this is exactly what they want to do, and they also told me that this is exactly what we made them to do. And we look forward to collaboration, not just between the virtual insurers themselves, but also between virtual insurers and traditional insurers. I think this, if we do it right, is the dark side with a bright lining. Now, again, I'm over time, but I'll give you a bit of the findings of the survey that we did. The survey that we did basically has a very good response. We issued about 150 questionnaires. We got a 93% response. I don't think we ever get better response than that. And in terms of the findings, we list out 4, which concerning third-party service provider, distribution channels, number of employees, and network devices. And you can see that, in fact, there is a big split. There is no majority, but you see both ends of the spectrum, not exactly negligible. So the conclusion is that risk profile is very diverse. It all depends on the size of operation. It also depends on the complexity of your business model. So the end game is we need some form of assessment tool so that we can focus resources on the right people and allow them to have a, shall I say, a measured response. Now, what we aim to do is, in fact, to try to look at some kind of cyber risk assessment framework. Now, this word scares a lot of people, but basically what it does is to assess risk level through delivery channels, through product services, and through business characteristics, and then try to gauge what is the optimal resilience level, and find a gap which is existing in individual entities and try to bridge it. Now, a lot of you will start asking me, am I going to adopt a readily available model which is used elsewhere for this? And a lot of them look at me with a lot of anxiety when they ask this question. I can only give you an analogy in Star Wars. Those of you who actually watch Star Wars will know that there's a Death Star. The Death Stars have many weapons. I can tell you that what we're aiming to use is the Super Blaster. Super Blaster only blasts one ship at a time. We're not ever going to give you the super laser that kills off the entire planet. So we are going to have calibrated and balanced response. As I said, the outcome has to be optimal. I'll conclude. Now, as I said, last year was a bicycle. How many of you know what this is? This is a Lambda class TA4 shuttle belonging to the Empire. We had a debate whether we should do a Millennium Falcon. Well, of course, it belongs to a smuggler. As an ex-commissioner customer, I can't allow that. Now, we also debated whether we should use a starfighter, the X-wing starfighter, but it belongs to the rebels. So I believe that for you guys, particularly those in the regulator entities, they will see the IA as stormtroopers, faceless, ruthless people who come down and raid your premises. Now, we are a bit of that, but I just want to conclude with you that we are the empire in a certain sense because we are the authority, but we do have a rebellious heart. So our idea is that by using infrastructure, technology, and connectivity, we can deliver to both. We can deliver on the left side to the market, and I cite the keyword sustainability, resilience, stability, and growth, which I think you are most concerned with. On the right side, we are serving the society. So the 4 keywords are inclusion, awareness, social burden, well, a lesser social burden, and also better protection. So if we do the X right, we will belong to a rebellious empire, and we will work together with the industry to deliver the right result. So with that, I hope I kept you entertained and motivated, and I look forward to seeing you again next year. Thank you.